everybody's a little more cautious about growth this year, saying that the kind of growth we saw in 2010 will not be repeated in 2011 because of inflationary fears.
Absolutely, but also we do have a twin track Africa this year. North Africa growing a lot more slowly at 0.7%, mainly because of Libya, which is showing a negative growth close to minus 20%. Egypt barely above 1%, Tunisia barely above percent. That is dragging down growth in North Africa, averaging 0.7%. However, Sub-Saharan Africa growing very strongly as predicted, well over 5%, 5.77%. So that's what is going on. But really, there are still risks, such as inflation and so forth.
You talk about a twin track growth, and what we did see when the democratization energy took momentum in North Africa is the risk aversion started weighing in on sub-Saharan Africa, and those who were selling off bonds because of the crisis in North Africa, you started to see, for instance, the South African market hammered significantly. So even though growth would be slow and subdued in North Africa, how will that not have any impact on sub-Saharan Africa?
Oh, there will certainly be an impact, absolutely. And you have highlighted it yourself there are various channels of impact. It could be financial markets where people take a view about the risk and they sell down because their perception is that South Africa or Zambia or Zimbabwe may have similar issues as North Africa, and that is true. There's also youth unemployment. There is not enough inclusion in the growth that we see. It is a risk. Hopefully it's a wake-up call for the leadership and policymakers.
We talk about growing inflationary trends the world over. We've seen monetary policy tightening in China, in as much as we're starting to see issues around sovereign debt getting deeper and more disconcerting. Portugal is one, and in Europe in general. How will the rest of the African continent be impacted?
Well, Africa naturally will see some impact in capital flows to African markets, in the bond market, in the equity market, as capital, quote unquote, stays at home in trying to make sure that they don't take too much risk out there. But I should say this, though, that Africa is still the continent of promise, is still the strongest growing continent overall. Well, China is not a continent, it's a country. So although this is a continent, and things are positive. And going forward, there will be a nice recovery in Tunisia, in Egypt next year, part technical, but also real. So we're still very hopeful for the continent.
What are going to be the determinants of growth in Africa? I mean, obviously you've seen higher oil prices and we've got some major exporters on the continent. What else is going to inspire this growth?
Is the growth of domestic demand being driven by a growing middle class. We estimate that this middle class right now is about 300 million people. We do recognize, I must really emphasize this, that the bottom end of that middle class, which is about just over 100 million people, are vulnerable to shocks, food prices, political risk, and other shocks. So the stable part is smaller than the 300 million. It's only about half of that, but it's still growing. It's growing faster than normal population growth, and that's a future that we need to bank on and see how we can support this middle class to create the domestic demand that it is providing at the moment.
What can the bank do in that respect? Because, I mean, it's an emerging market problem, isn't it? Making sure that domestic consumption is so robust that it accounts for a significant component of GDP. And you talk about that lower band. Most of the so-called African middle class are still people earning less than $10 a day.
Absolutely. They are still in that bracket, frankly. What we can do as a bank and other people too is to really drive the private sector agenda, which will create jobs. Because once these people are employed, then they can consume. But also some of them become entrepreneurs. So we should drive entrepreneurship, support SMEs, support small businesses and large businesses. That private sector agenda is what we really need to support to support this middle class so they become effective economic agents.
I mean, obviously here it's a meeting of great minds and leaders, finance ministers, governors of banks, shareholders of the African Development Bank. What's being said in that respect? Because 70% of your funding is directed towards infrastructure projects, and nobody's disputing that infrastructure is the thing that's going to galvanize growth. But that's where your energies are at.
Frankly, infrastructure is a big pillar for inclusive growth. Think about electricity generation. It's quite easy to think of the power generation side and forget about the transmission. It is the transmission element that deals with inclusion. When electricity gets to the rural areas, to the poor, that's when infrastructure becomes really inclusive. Think about roads. 40% of fresh produce in Africa from the rural areas is lost between the farm and the market. If you have a road which allows people to take their produce to the market,
That's a lot of inclusion. So infrastructure is at the core of this.
And I mean, when it comes to infrastructure, we're hearing that private sector investment in that area is less than about 15%. And even that 15%, the bulk of it is directed at telecoms because that's where investors see it being profitable. So what's being said about getting governments to partner with business in order to fast track the infrastructure spend?
The process of getting government to be an effective partner in public-private partnerships is to capacitate government in the first place. Give them government officials the skills to understand what it takes to put together a power purchase agreement, to put a PPP together, to put this and that together. That legal framework, policy framework, we are doing that as a bank. Then they become an effective partner. They see the need. But number two is project preparedness. We also have a facility to help countries prepare their projects so they are ready, they are bankable, they can be presented to investors. So there's a lot of capacity building that ought to be done, and that partly explains why the public sector is not active in this space when it ought to be active.
And the African Development Bank, just generally, your outlook for 2011 as an institution, you've still got a AAA credit rating, but you've got a world of partners, from the Portuguese to the Chinese to the African, so many of them indebted. They can't possibly be meeting their obligations.
They are meeting their obligations. We're so delighted. They see the need to support Africa. They see Africa now as part of the global economic solution and not some residual continent that you deal with when you've dealt with the rest of the world. Africa is at the core. They take this very seriously. Think about it. Here in Portugal, do you know that Angolan companies are now investing in Portugal? Now you have reverse FDI. Surely Africa is very important.